Welcome everyone to today's webinar about the Regen Farmers Mutual. I'm Elizabeth Evans. I have a farm. I've set up a permaculture farm on Gringai country, which is at the foot of the Barrington Tops here in New South Wales. But by training, I'm actually a veterinarian, and I guess over the last decade or so, I've been really quite concerned about climate change. It's hurting the animals that we love, and also we're losing biodiversity. And we've obviously got some serious weather events that have been happening in the last couple of years. So I've always been quite keen to protect the environment, but it's getting to the point now where we really all have to band together to do that. So I joined a group called Vets for Climate Action. And then I heard about, I actually met Wardy at an event one time, and heard about the Regen Farmers Mutual, and I thought, oh, this is a really good idea. So the mutual is set up and owned by farmers, for farmers, which I think is quite unique in that regard. And I was able to get on the steering committee for the Regen Farmers Mutual, and I've been involved in the sort of setup phase over the last 6 months or more. And I really think it's a great opportunity for farmers to protect their natural assets while still getting value out of that. So I'm really keen to see it progress, and I think hopefully everyone here today is interested in what the Regen Farmers Mutual can offer. So I'm going to hand over to two people who you may know already. One is Rowan Clark, who'll start up first with some information for us, and then Andrew Ward or Wardy will take on from there. We'll be able to have questions at the end. Not quite sure yet how we've set that up, Wardy, but we'll get to that when we get there. Would you like people to put questions in the chat, or?
Yeah, why not? If you've got a question that comes to you and you can't wait till the Q&A, drop it in the chat and we'll make sure to pick it up at the end when it's Q&A.
Excellent. So with no further ado, I'll hand over to Rowan to start off the proceedings. But thank you all so much for joining us. Obviously, an hour out of your day is always tough, so we really do appreciate that. Hopefully, we'll get a lot out of it.
Hello, everyone. I've got two kids cooking in the kitchen at the same time. So if you're hearing lovely cooking noises in the background, that's them. It's one of the benefits of working from home, isn't it? Sorry, my name is Rowan Clark. I'm the finance kind of person within Regen Farmers Mutual, and here's my dog as well. And so I'm going to start out talking a little bit about environmental markets to give us a bit of background. I'm kind of the dry, boring one, if you like. Morty is the extrovert in the family, so he's the one who'll kind of hopefully bring a little more life and energy to the party. But let me start off by describing what we're going to be going through today. We're going to be going pretty quickly because we don't have a lot of time, so we're not going to go into a lot of depth, if you like. So first part of this will be an overview of the current markets, and then Wardy will then talk through, specifically how the mutual is kind of approaching enabling farmers to engage with environmental markets. And by way of introduction, so environmental markets, why do we care, if you like? And we care because it's not only because we need to kind of protect the land, but as these markets are growing fast, and there is a demand for growing awareness across the community that we need to do things differently. And so by virtue of that, the environmental markets are growing to reflect that. And so you can see that they're growing by both type and size. So the current market's tiny. We'll come to it right at the end, but there's roughly about just over $200 million of dollars worth of transactions that were undertaken in 2020. Carbon Market Institute has kind of suggested that the market might be $10 to $24 billion by 2030. Now, that's kind of a big spread. So it really is a guess. And CSIRO has suggested that the environmental markets in total might reach the size of $48 billion by 2050. Now, whether those numbers are correct or not, what it does indicate is that there is this rapid growth that's going to come, and it's going to come beyond carbon. So when we talk about environmental markets, we're talking about things well and truly beyond that. And probably the key point here is that most farmers are too small to actually engage with what they are at the moment. So in terms of just a bit of history or context for what's happening in the market, we know that the governments are responding to the need to protect and preserve the environment and respond to climate change. And so what's actually happening is what we're looking to price in the cost of fossil fuels. And so that's why we've got energy prices going up at the moment. And we're living through a time that looks a lot like the OPEC crisis in the 70s, where we've got energy prices going up. But the driver this time is the fact that we need to price those negative externalities. And that's what's being captured in higher carbon prices. And what you can see there on the right is the European prices and how they've been climbing in euros. So they're above $100 a tonne Aussie currently. And so they've been going up. And the point of this chart is to show that the way it's been going up is it's been over there, it's a compliance market. What the government has done is required that emitters buy carbon credits. So it requires them to do certain things. And gradually over time, it's been imposing more and more regulations on emitters to buy carbon credits. And that's, so it's a demand-driven price escalation. And in Australia, we don't have a compliance market. We've got a government who's the Commonwealth government, which is the kind of the single large buyer. But notwithstanding that fact, we are seeing that same effect starting to wash through with the price of carbon credits being, in this case, ACCUs, which is the Commonwealth government's Australian carbon credit unit price. So when you transact with the Commonwealth government, they buy through the Emissions Reduction Fund, and they buy ACCUs. And so that's the Australian carbon credit, and those carbon credit prices have been rising. Noting that this is the spot price, so there isn't much by the way of transactions happening at these prices, but prices in general are rising. And that's reflecting demand from corporates, institutions starting to enter the market. So as I say, the government in Australia dominates our market. It's very much, the Commonwealth government's been buying 95, 96% of total ACCUs that have been issued over the years. And you can see that there on the right, that there's the government, the Emission Reductions Fund in blue. And at the top here, you can see the introduction of other buyers in the market. And the green line, the green segment, is the voluntary market. Voluntary market for ACCUs. So that's the voluntary market where corporates or institutions are buying carbon in the form of ACCUs. But that's not the whole story from the voluntary market perspective. Corporates are so there is this increasing tide of demand from corporates that are responding to consumers requiring that they respect the changing needs with respect to the environment, and so that's an ESG trend that's washing through markets, and so corporates are responding to that globally, and in the US and Europe in particular, the volumes going through the voluntary markets have been have mushroomed this year in particular, 2021. In Australia, we're still very much early in that phase, but the way that the market in Australia is really being driven is kind of captured here, that because corporates are buying carbon credits, and when they buy it, there's no profit attached, it's coming straight off their bottom line. So what they're, in Australia in particular, the corporates are particularly price sensitive. So what they're typically doing is what you're seeing over here on the right. Here is, when you deal with this company, Boomi, you can actually offset your carbon credit. And what they're doing at the back end is what corporates in Australia are doing. I'm buying 0.1 kilograms of Australian conservation, which provides a story. And so in this case, it was protecting a koala. And so I'm buying just a tiny little bit of that, but I'm buying a lot more of cheap carbon credits from an Indian solar project. And so that's the way corporates in Australia particularly are approaching their carbon at the moment, where, and this brings that out in the sense you can see here, this is the carbon market in Australia last year. There's 226 million in total volume. That was, and the breakdown of that, you can see up here on the right, that's the ERF. That by far and away dominates the market. And what we see down here on the left is this voluntary demand. And what we're saying is the voluntary demand for ACCUs, being the Commonwealth government's, the Australian carbon credit unit, is low because the price at this point in time was $17. Corporates are instead buying up on these international carbon credits, which are a hell of a lot cheaper. And so that's the dynamic of the market currently. We don't expect that, so we expect that to change as the market matures and grows. And in some senses, this, when you see someone like Greening Australia pursuing offshore projects, they're reflecting this kind of dynamic, but it doesn't really make sense for greening Australia to be greening other parts of the world kind of thing. So they're pursuing a strategy of, well, creating projects so they can click the ticket on the carbon projects. And so that kind of talks to the problem in the market, that the market structure is set up where you have one large buyer, being government, and then you have these corporate, these brokers whose interest is not is not about creating transparency and standardization. Their interests are about, in a sense, creating complexity, because they're packaging up these transactions between voluntary units, offshore units, to be able to kind of to create the best price for a corporate, if you like. And what the market needs is standardization and competition, and that's where we think that the mutual comes in. In terms of markets, we've been speaking about carbon there, but particularly from a corporate perspective, but also from a government perspective, the world is moving beyond carbon. And so that we've got COP26 coming up, and biodiversity, and the idea of having biodiversity as an environmental market is becoming clearer and clearer into focus. And in response to that, the Commonwealth governments have these biodiversity stewardship scheme and the enhanced remnant scheme that they've just announced. The LRF in Queensland has that idea of co-benefits. They're going to pay you a premium for co-benefits, whether it's in terms of Indigenous credits or other forms of biodiversity or under the Accounting for Nature. Similarly, in WA, the Bushbank program that's due any time now is going to be recognising that same type of process where they're paying for biodiversity in addition to carbon. And similarly, PIP-PAP in New South Wales that's emerging. And so the point is that government is kind of recognising we need to move beyond carbon. But the thing that they're not good at doing, they're very good at handing out money, but they're not good at catalysing markets. It's kind of like the idea of a market where you have one large buyer is not much of a market at all, really. And so the world recognises that there's a need for change, particularly, and so the government's trying to create a trading platform where they're trying to encourage other corporates and institutional investors to come into the market to acquire environmental credits, and so the corporates by themselves, similarly, are looking to offset their ESG kind of benefits increasingly. So there's a momentum and demand for change, and that momentum currently is based around the idea that you start with carbon and then you have co-benefits. So it's a premium price for a carbon unit, where those co-benefits may be biodiversity or cultural or something else. And there's a need for transparency and standardisation to drive down the transaction costs, which are currently punitive. And so there are initiatives like the Marketplace for Nature, which the Farmers Mutual is actually part of, with the likes of the Nature Conservancy and ILSC and Pollination Group. And that's about trying to bring the buy side together to create a common language around what environmental markets are kind of evolving to, and to create that transparency and liquidity to drive down prices and achieve better outcomes for farmers and for the buy side as well. So trying to in a sense disintermediate the current broker market. And there's also the likes of the Carbon Farming Foundation that's been set up out of WA, which is more of a do-it-yourself type of approach, but it similarly is looking to find ways to enable in this case, farmers to be able to transact in markets at the lowest possible cost. So what we're trying to say here is that the current market structure is not well aligned to brokers, to farmers. That because of it's not a fault of the brokers. I'm a former broker myself. I understand that the motivation as a broker is, my objective is to kind of optimise my margin, and the way I kind of do that is by keeping both sides of the transaction, the buyers and sellers, happy. And the way I do that is by trying to make it as complex as possible. That's just kind of the nature of that role. That's the way the incentive structure is set up. So, but that reflects the market structure. And so the opportunity is to kind of to create a farmers mutual because it will represent the farmers. It aggregates the farmers. It represents one side of the equation. And so that'll enable us to break these margins. So currently margins in the carbon markets you're typically around about 50%. You might get less if you've got a very large transaction. Similarly, you might pay more. South Pole has a particular transaction structure or product in the soil carbon market where they'll charge you 80% of the revenue, but they'll pay all the upfront costs to set up the soil carbon project. And so in response to that, we about early last year started on a process to understand, is there an opportunity to help farmers come together to create a farmer-owned mutual to effectively change the dynamics of the market? And so we undertook a series of three series of workshops, and the first of which was one undertaken with a group of farmers, but also conservation organisations, government organisations, to understand the opportunity. And as we stepped through these series of workshops, we understood that there was an opportunity, and that the way to actually to capture that opportunity was to create a mutual. And so it was then that this group of farmers came together that have kind of ushered us through this process, providing the guidance with respect to how the mutual would work. And so what's emerged from this is the Regen Farmers Mutual. And at the bottom line, the difference between the mutual and existing brokers is the mutual is because it's farmer owned, it's wholly aligned to farmers. And that means that farmers can retain, maximise the profits or the revenue that is generated from transactions. So under a transaction through the Farmers Mutual, 80% of the revenue will go to the farmer. And similarly, because the mutual is this thin organisation, its infrastructure that groups of farmers can use to actually access markets. This just happens to be farmer-owned infrastructure. And so the idea is that farmer-owned infrastructure can be leveraged by like a farm group in a local region to enable that aggregation to occur, so that 10% of the revenue would go to support the services that farmers on the ground need in their local region. And 10% of revenue would go to the mutual to cover its operating costs. And so you can see that dynamic at play there, that because it's farmer-owned, it's farmers kind of setting this thing up with a view to maximising the benefits that are generated both individually and collectively. And so that's where we've landed. Now, clearly, that was a really very high-level kind of view of the world from a market's perspective. One of the things, the bits of feedback we've been getting is that, because these markets are so new, whether it's the carbon or biodiversity market or others, we have been receiving feedback that people want to hear more. So one of the things we just wanted to I suppose, pose as a question to the group today is, if you are interested in finding out more, we're happy to kind of run a demystifying carbon markets or demystifying biodiversity markets for that matter. So webinars that go that next level of depth deeper, if you're interested. So one of the things we wanted to posit to you, and just reply in the chat if you are interested, but if folk are interested, then just make a note in the chat saying, yep, I'm interested in an additional webinar and I'm interested in this topic. And if there's a significant interest, then we'll do a webinar on that particular topic as a way of kind of stepping forward on the education process. Is that, Morty, have I led us astray, or have we arrived at the right place?
I think we've arrived at the right place. Would you mind playing guide for me as I go through my slides, if I just give you the nod? I'll give everybody a little bit of time also. If you are interested in those beyond surface level carbon and biodiversity investigations, please put it in the chat, and post chat we'll get together another date for a webinar, and Rowan can take you or a group of you through that. My job today, Rowan, if you can go to the next, is to kind of talk about how we build from the ground up. And I guess we start with a definition of regen farmers. So a regenerative farmer, we say, has an economic and an ecological profit. And there's very, good reasons for that definition. If you've got an economic profit but an ecological loss, you can't do that forever. You're mining your ecological capital, and eventually, if you take up enough ecological capital, you'll send your farm And if enough farmers do it, you send the whole bioregion broke by mining the ecological capital. And that's why desertification is such a big deal. Now, also, you can't be in regenerative agriculture if you're making an ecological profit, but not an economic profit. That's conservation. So a condition of regenerative agriculture is that you must make an economic and an ecological profit. And for the first time, this big green change as the markets expand from 200 million to 48 billion over the next 28 years, which is an enormous growth rate. There are going to be mechanisms, government, corporate, voluntary, emerging with technology, that are willing to pay farmers for their ecological profit. And that's pretty exciting for regenerative farmers, because that means you can get your economic profit from food and fibre, and you can get your economic profit from the ecological good that you're doing day to day in your business. Now, what works as an environmental transaction for each individual farmer will depend on their context. So you're not going to find from us at the Mutual a promotion of a specific method, like the soil carbon method, or an avoided greenhouse gas method, or a planting trees method. In fact, what you'll find from us is support for you as an individual through a farm group that you already belong to, that is either local to you or is aligned with your practice. And then we're going to help you to do those sort of 3 steps of understand your options, make a plan, and then make money from those environmental markets that support your individual context. Ryan, if you could go to the next slide. So let's what should be there is a bit about your farm scale and getting you to think about, well, what might work in your farm context. So it might be that you can put a riparian zone, a biodiverse, rich zone of plantings that's good for pollinators and birds. It's good for your mental health in a drought, that you've got now a dam surrounded by nature. And you can get rewarded several ways for doing such an activity on your farm. You can have that asset built for you for very low finance costs because it's got environmental value. But what gets more exciting beyond your farm, in your context, is what a whole creek or a whole catchment can do. So when you rehabilitate or regenerate or provide habitat around a dam on your property, you're having an impact, definitely. But if you and your neighbours are coordinating your impacts along the length of the river, then you're actually having a hydrological impact on the whole of the catchment, which means you might be reducing flood issues, or it might be that you're increasing your resilience to drought. If you could go to the next one, please, Ryan. So the guiding kind of inspiration for Regen Farmers Mutual was a woman, is a woman called Claire Cannon. Now Claire's down from Holbrook Way, and what she did on her farm was she took advantage of a highway being built near Holbrook that needed to get some biodiversity offsets. And so she put her hand up and said, look, we've got 600 hectares of box woodland. She understood that she would be able to seasonally graze that box woodland so it wouldn't drop too much out of the production value of her business, but that it had huge economic value. And because she was protecting that, she got assistance from local universities, basically her farm group before there was farm groups, who were able to support her to get plantings in that zone and generate carbon credits, which generated a financial benefit of, let's say, $250,000. And then she was, more importantly, able to tell, hey, I've got this boxwood land, I've got this carbon benefit. even though I've put the box woodland under a protected covenant and that in theory dropped my value of my property, the carbon deal more than offsetted for it. But the thing that really kicked it up for Claire was that, you know, she was able to get into the Cape Grim and the QZ supply chains and receive premiums for her grass-fed beef and her superfine merino wool. And it was seeing Claire's story about how she was making an economic and an ecological profit by using the ecological functions that she was protecting and nurturing and promoting to generate revenue, not just from public markets through the carbon, not through state markets, through the protected habitat covenant, but also through the food and fibre having a story, a rich story about its green provenance, which made it possible for her to slot into those supply chains that would give her a premium on her beef and wool. Now, if you would run the next, standing carbon is one of the most popular carbon methods because it's pretty simple. It's about putting in trees that aren't currently on a landscape. And depending on where you put those trees in, the government has already a prescribed database. They call it the full cam data set. And if you plant trees and they get to 2 meters tall with a 20% crowning, depending where you put them, you'll get accus delivered to you because you've filled in the requirements, and then you can exchange those accus for the current market price. So if you go down to the next one, Rowan, you can see that on that coloured map that we were showing was Loddon Plains, and there was lots of blues and greens and occasionally red areas. Now, the difference between a blue area is it's 22 tonnes of carbon dioxide equivalent per hectare, and the red is 271 tonnes of carbon dioxide equivalent per hectare, which obviously is like a 10 times difference about where you would put any plantation or any trees that you're planting. Now, the types of trees that you choose might be, you know, based on pure economics. You might go for a blue gum because that gives you a maximum economic return, or you might go for a multi-species. They're the sorts of decisions that you as a farmer in your context need to make. But beyond what you can do on your own, if you go back up, Rowan, to the previous slide, what we're looking at here is, this slide is the Loddon Plains area. And they're particularly interested in a community. They have what they call a priority for creating an east-west biodiversity corridor that is going to connect two bird populations that currently don't get to meet one another in spring and get to make little chicks. And both of those bird populations can be supported if the farmers between those bird populations make their corridors of planting that provide shelter, that provide hedge effect for their farm, and they also get carbon credits for. They can additionally provide a landscape scale benefit, which is introducing those two bird colonies to one another. So a pretty exciting project that shows the benefit to an individual of how to do standing carbon, but also shows the benefit to a landscape when those farmers coordinate. So 2 more slides down, if you don't mind. There's also huge opportunity in soil carbon. Now, not every region is going to enjoy the same opportunity around soil carbon. If you've got flogged out land and access to water, it's a lot easier to get soil carbon persistent in the soil. But primarily, the thing you need to do in a soil carbon transaction is a change of practice. And the most common change of practice is going from set stocking to time-controlled grazing, or from fixed wire fences to electric fences. Now, soil carbon can be marketed through the ERF, the regulated government market, or if you go to the next slide, Rowan, or as we've seen this year with Wilmot and Cavan stations, you can actually sell soil carbon into a voluntary market, as Wilmot and Cavan station did when they sold earlier this year some soil carbon to Microsoft through the Regen network. Now, what's really exciting about that particular transaction is that it's a pioneer transaction where not only Wilmot and Cavan stations, like executive teams, sharing their learnings from what they did in order to, sell the product, but Microsoft, who bought the product, are also sharing their learning with other buyers. You see, Microsoft, and in fact, no corporation, was signed up to net zero 2030 2 years ago. But now 2,500 organizations across the world, often the biggest ones like Microsoft, BHP, Qantas, they've all signed up to net zero by 2030. And so now that they've made those commitments, they actually need to know, well, how do we purchase environmental goods and services from farmers outside of the government schemes that give us not only our carbon benefit, but in the case of Wilmot, they were also able to effectively get premiums on animal welfare, social good, and we expect that the richness of the story that farmers can tell around their carbon in the voluntary markets will see them get additional prices. So soil carbon, regulated or voluntary markets, there's markets for both, and they're growing. Excitingly, they're growing quickly. Next slide, please, Ron. Now, the other thing that's important to kind of grasp on the ground is, whilst carbon and the ACCU has been established through scientists and policy and regimes that have been created as methods, registration panels, good governance around the quality and verification, it's a world-leading standard, the Australian Carbon Credit Unit. And so what buyers are asking and what regulators are saying is, let's attach some of these other benefits, biodiversity, social, cultural, animal welfare, for example, to the carbon credit unit. And in doing so, you've got some base rigor. So we're seeing carbon plus, where the plus could be biodiversity, cultural benefit, social benefit, water use of benefit, other benefits. And as those benefits get priced in and attached to carbon, farmers can earn more, and we call that carbon plus. Next slide, please, Rowan. So one example, we're working with farmers in between Noosa and Gympie in Queensland, and they're working under the LRF framework in Queensland, which is the Land Restoration Framework. NIP borrows from the ERF, the regulated carbon market. So you can sell carbon plus biodiversity. And the way they're measuring that biodiversity locally is using the Accounting for Nature framework up to a tier 1 framework. We were talking with Adrian Ward, no relation, but a great bloke. And he's the CEO of Accounting for Nature. And he talked to us through the changes in 12 months with Carbon Plus. So 12 months ago, the carbon price was between $17 and $20. Now it's between $26 and $30. The biodiversity component attached to each carbon unit through the LRF 12 months ago was worth $30. And they just, as Accounting for Nature, helped facilitate a transaction through the LRF for $36. So in the last 12 months, the biodiversity plus bit had a 12 times increase in 12 months. So there's rapid growth in carbon plus and in the value that farmers can get from that additionality. Next one, please. So in summary, I guess, about the Regen Farmers Mutual, we don't care whether it's a regulated or a voluntary market, a biodiversity offset market or a state biodiversity credit unit or something else that emerges over time. We're agnostic about the market. What we care about is the process and helping our farmers engage, define, market, execute, and deliver the environmental goods and services that make sense on their farm within their context, that can maybe be coupled and aggregated with neighbours in their area so that they can make a landscape scale impact and deliver value beyond the traditional regulated markets are offering. And that additional value is something that a broker, the Regen Farmers Mutual can do that other brokers won't. And of course, we're really interested in our members being happy, and the happiest thing that our members, or the thing that will make our members most happy, is seeing money in their pocket and not in a middleman's pocket. And so our business model is, farmers engage with our nature fund, Regen Mutual Nature Fund. We then remarket the carbon, the biodiversity, the conservation for the highest price that we can get, and guarantee that 80 cents in the dollar from that, when I say guarantee, we make sure that the systems are there to put in place that the farmer gets 80 cents in the dollar, the farm group gets 10 cents in the dollar, and the transaction is reasonably priced. Next one, please, Ron. And we're doing this across Australia, across many different environments. So we've already talked about the LRF process that we're doing with the Food and Agribusiness Network in Queensland. We talked a little about what Loddon Plains is doing with their standing carbon and connecting to bird colonies. We didn't talk about what we're doing along the East Coast escarpment, but it's really exciting. We've found in the north coast CMA of New South Wales around Bellingen, we're seeing that farmers on their own in the catchment can go from set stocking to time-controlled grazing. In doing so, they can enter into the soil carbon market, be that regulated or voluntary. And we're seeing that down in the riparian, in the valley around Bellingen, where it's previously been cleared, and that clearing has led to really fast water during floods. Actually, we can use biodiversity offsets to replant and fix that riparian zone, which not only creates habitat and sequesters carbon, but it slows floodwaters down so that by the time you're getting to the coastal flats, floods don't have to be as severe and don't have to be as damaging. And when floods aren't as severe and damaging, that's something that Transport for New South Wales, who control the RTA and the road repair, is really interested in. So what we can do is help those individual farmers, whether they're in the catchment, the valley, or the coastal plains, get paid for their individual benefit, but then aggregate what they're doing and coordinate what they're doing collectively to tap into additional value from Transport for New South Wales, where they're prepared to pay for prevention instead of repair when it comes to the effects of flooding. Next, if you don't mind, Ron. So if you're a farmer, you're working from the ground up, the first thing you need to really understand is your context and what are the environmental assets that you have on your farm, whether they're carbon or biodiversity or whole of farm, or maybe it's accessing finance to build a dam with a riparian zone from it, or maybe you'll be better rewarded just through the consumers or the supply chains recognizing that you're carbon neutral or carbon negative. And you might be able to continue to access markets like Europe, where they're going to charge in the carbon adjustment barrier tax, which will penalise Australian farmers unless they can show that their beef production is also sequestering carbon in the process and not contributing to it. So next slide, please, Ron. So what we do with an environmental farm assessment, we help you to understand your options, make a plan, and make money from environmental markets. But how we do that is really interesting. So we work with farmers, collect information from their farm, from an assessor looking at the maps, doing some desktop research, and from in-field samples. We take all of that data and we say that data is a digital twin of that farm. And then using that digital twin, we can enable the conservation, biodiversity and carbon markets, whether they're regulated or voluntary, to give farmers an idea of the value of their farm through that particular market's view of the world. And then farmers can choose what makes most sense within their context. In fact, using the digital twin, they can model comparisons between doing soil carbon here or standing carbon there or a biodiverse zone here and model that against existing food and fibre production. Additionally, if they're going to enter into environmental markets with the Regen Farmers Mutual, they're going to need to enter into smart agreements that verify the data that supports those environmental transactions. And down the track, it's quite reasonable to assume that supply chains and terminal markets are going to want to know the greenness of the food and fibre coming off farms, and that digital twin provides evidence to those supply chains. Last but not least, Rowan, the thing that you would need to do as your first step as a farmer to access environmental markets is get an environmental farm assessment. These we've been piloting recently and we'll be rolling out in 2022. For now, the job is to get your name on the wait list registration. What that does, obviously, is gives you the option of buying it at a cheap rate when it's released in January 2022. But importantly, for the members, launching people aware of us. And if we can hundreds of farmers, maybe even 1,000 farmers by Christmas, we will have the negotiating power to go meet with the equivalent of Transport for New South Wales in other states, to go talk with the Department of Agriculture, Water and Environment with the backing of farmers. So each farmer that joins the waiting list improves the negotiating power for every farmer member who's a part of the mutual, which enables us to get the best possible deal for our farmers. So if you're wondering what you can do out of this webinar, it's go to the link. I think Leah will have pasted it in the chat and sign up for the waiting list. Right now, there's no cost or obligation to join the waiting list. If you ultimately do buy an environmental farm assessment, which we hope you'll see is good value, it'll be $1,000 for the first 1,000 farmers. Beyond that first 1,000 farmers, the price might get adjusted.